China was first in, first out of the COVID-19 pandemic. Therefore, its economy is at a more advanced stage of recovery relative to other markets around the world. Moreover, China was able to reopen its factories sooner, thus enabling it to capture a larger market share of the global trade pie, further cementing its pivotal role in global value chains, even as many countries continue to experience bottlenecks today. Going forwards, we expect that domestic consumption will take over for the next leg of China's recovery, with retail sales expanding at a vigorous pace of 15% in 2021, reversing the contraction in 2020 and expanding twice as rapidly as they did in 2019. Despite this shift, exports will continue to provide tailwind, expanding by 12% in 2021, up from 0.8% in 2020 and minus 0.2% in 2019. Much of this upside can be traced back to a pickup in demand from the US, which will overtake ASEAN as the largest export market in 2021. That said, China is utilizing the additional tailwind to forge ahead with reforms, and at the forefront of these efforts is the deleveraging campaign. Contrary to 2008, when China embarked in a massive 4 trillion yuan fiscal stimulus program, the policy response in 2020 has been more targeted. However, as the repercussions of China's post-global financial crisis stimulus continue to linger, authorities are keen to resume policy normalization and avoid exacerbating existing asset bubbles. In addition, the antitrust drive will entail some degree of downside pressure as the government cracks down on oligopolistic behaviors that have benefited large companies in the past. However, the impact will be positive in the long term via productivity channels. Much hinges on China's ability to pivot towards more sustainable, consumption-oriented growth. But the vacuum that had existed prior to this antitrust drive had enabled companies to build large market shares, stifling competition and leading to problematic business practices. In sum, the focus will be on quality over quantity of growth, as GDP momentum is expected to slow to 5.6% in the remainder of the year, reaching 8.6% in 2021. On the contrary, sequential growth will pick up to 1.5% quarter-on-quarter, up from 0.4% in Q1. As a result, we continue to see cyclical and strategic opportunity in China's transformation, but investors ought to remain selective. A domestic focus on soft consumption and early-stage innovation may provide shelter from potential regulatory and external pressures ahead.